Welcome to today's market report. European stock markets are seen opening largely unchanged on Tuesday as investors consolidate after the strong gains of the previous session, weighing the potential for more stimulus against the damage done by the ongoing coronavirus pandemic. DAX future traded 0.1% lower, just below 12,800. CAC climbed 0.1% at 4,800. FTSE was flat, trading just above 6,000. These benchmark cash indexes all posted strong gains on Monday, with the DAX closing 3.2% higher. Democratic lawmakers unveiled late on Monday a new $2.2 trillion coronavirus relief bill, which U.S. House of Representatives Speaker Nancy Pelosi described as a compromise measure. This looks like a last-ditch effort to revive stalled talks with the White House, with the total cost of the package now closer to the level the Republicans could stomach. In Europe, European Central Bank President Christine Lagarde said while addressing European lawmakers on Monday that the region's central bank is ready to deploy more monetary stimulus to aid the recovery if needed as the pandemic hampers prospects for the economy. This comes as the global death toll from COVID-19 rose past 1 million on Tuesday, according to data from the Johns Hopkins University, with the death rate increasing in recent weeks as infections surged in several countries. Europe accounts for nearly 25% of the death, and the World Health Organization has warned of a worrying spread in Western Europe, just weeks away from the winter flu season. Investors will also be keeping a wary eye on the latest Brexit talks, while the first debate between US President Donald Trump and rival Joe Biden takes place later Tuesday and will be closely watched in the run-up to November's presidential election. In corporate news, the German car sector may be in focus after Bloomberg reported that Uber is weighing up a purchase of FreeNow, a ride-hailing joint venture between Daimler and BMW. Oil prices edged lower on Tuesday as concerns about the impact on demand from rising coronavirus cases took precedence over hopes that a new stimulus package may be in the offing. The market will be looking for signs of U.S. demand growth in inventory data due on Tuesday. The crude future traded 0.6% lower at $40.34 a barrel. Brent fell 0.6% to $42.63 a barrel. Gold future rose 0.1% to $1,884.55 per ounce. On the FX side, GBP USD is attempting to recover towards 130.70 level. The pair is bouncing from the 200-day moving average at 127.17, whilst a failure here would allow for further losses to 122.50 area, according to FX strategists. GBP USD saw a decent recovery yesterday from the 200-day moving average, but the rally has yet to overcome any resistance of note. With the headlines from the Times suggesting the European Union's softer stand on Brexit, pound bulls could ignore the FT news suggesting hardships for UK Chancellor Rishi Sunak. The bloc not only shows readiness to alter the legal statement while taking clues from Britain, but also drops the previous tone of warnings. The news also ignores the UK Cabinet Minister Michael Gove's rejection to remove the clauses in the internal market bill that confront the Brexit withdrawal agreement. On the other hand, the FT piece relies on the comments from the Institute for Fiscal Studies that highlight the risk of failing on the Tory manifesto promises without raising taxes or huge borrowing. It should be noted that the BOE's Deputy Governor Sir Dave Ramsden mentioned at present negative policy rates would be less effective as a tool to stimulate the economy. Euro has rebounded strongly from a low of 116.13, trading at 116.70. The dollar is steady ahead of the presidential debate at 94.233. This is today's market news. Thanks for listening. We'll see you next time.